you go back to what we used to say about Nigeria and Africa, right? In the 90s, we were talking about a digital divide, right? Digital divide. How can Africa ever get on the technology loop, right? In 1994, the internet came, and I don't know how many of you remember when we started the internet. It wasn't wireless, so. Meta, you remember Sita? X500, or what was that IP protocol? Okay, so and then we used to turn off graphics because we couldn't afford to download the images. That's how bad it was. Then you now got modems and you could now have ISPs and things like that. Okay. So we've come a long way, and I think that one thing we can see is that we've leapfrogged a lot of things, and we can see it in our environment, we can see it in the products and services, we can see it in the space in general. So let's have a conversation, and let me start and let them tell you why we're celebrating them. So I'm going to pass the mic around to each of them. Oh, they have one. Okay, great. So I'm going to let them tell you why we're celebrating them, because they do know some things. I'm just a teacher, all right? So I just know how to talk. So please, Yvonne, go ahead.
Introduce yourself.
Introduce yourself and tell us why you're doing awesome things.
Okay. So Yvonne Johnson, I actually...
Sell yourself.
I actually started off my career in technology, believe it or not. I started off as a developer, then moved on to kind of sales and then consulting. And then I switched into financial services. So most recently, I led the strategy team of First Bank. And then a couple of years ago, it's so funny how Bankole was talking about Paga, because I remember when he started and I did some advisory work for him and then went on to do other angel investments and Deller, Flutterwave, and some of the other stuff. So when you talk about how long we have come, it's actually very impressive to really sit down and see how much we've done.
Okay, my name is Gbenga Agboola, co-founder and CEO of Flutterwave. So this journey started in 2012 when we felt there is a need to build a superhighway infrastructure for payments in Africa, right? I felt that in Africa to leapfrog, we need to have commerce, payment, and logistics done properly, right? And I felt the reason why the likes of Konga and Jumia at that time were doing pay on delivery was because payment was not available, right? So we started our infrastructure play in 2012. And the whole point is, how do we ensure a small merchant in Lagos can sell to somebody in Canada or somebody in Kenya who has M-Pesa and shillings, and you have Naira here to collect? Back then, the only payment gateway in Nigeria was InterSwitch. And to integrate, you have to pay 150K. Who remembers that? I remember. So you have to pay 150K to get the APIs, and then you have to wait till when your project is ready. And then it only works in Nigeria, right? It only works then for only MasterCard and VevCard. Visa was not working on InterSwitch. Back in the day as well, if you go to a merchant in Nigeria, you see a POS for MasterCard, a POS for Visa, a POS for different payment types, and then they don't usually work, right? So the whole point of what we're trying to do at that point was, how do we build that superhighway payment infrastructure? So we started first as an infrastructure company in Flutterwave, before we started building our product, which is Rave for merchant, now Barter for consumers. But pretty much, build an infrastructure that allows the next Amazon to be built in Africa. Because I say Amazon is easy to build because there's logistics in America that works, there's payment that works. But over here, if those things are not fixed, we can't really leapfrog. Today, you hear the likes of Tim talking about Bitcoin. Amazing work he's doing, but it's leveraging on a very great payment infrastructure. So, yeah. I forgot.
My name is Adia Sowho. I'm the MD of Minds Nigeria. Happy to be here. I mean, I talk a lot, so I mean, my story is out there. So I'm not going to bore you all with history lessons, but I'm happy to be here today. I'm happy we're celebrating today because I'm humbled and reflective of achievements, especially at mine. So we've granted 1 million loans in Nigeria so far, as of today. So that is an achievement that we are going to, thank you, we are going to start celebrating. And I'm also happy to say that I'm sitting on a panel with people that I do business with, because I think that in this ecosystem, we need to hold hands, and not just at events, not with hug and kisses, but with contracts and with, you know, payments T+1. You know what I mean? Invoices and stuff. No, it's true. So to be honest, I'm doing business with Titi. I'm doing business with GB. Right? So, and I'd love to do business with the Ayowo team, right? I'd never met Tomi before, but hopefully we can fix that after this. So I think that rather than talk about myself, guys, as you're jumping into the ecosystem, let's work together. It is really, really important. And the tighter this ecosystem is, the more value we can generate to make the pie bigger and protect ourselves from a regulation that doesn't quite understand who we are, what we do, and what we're trying to achieve. When we show the regulator money, they react very well to that, right? So let's not go with the rhetoric and complaints and...
We'll come back. See my panel. Titi.
So much passion. Hello, everyone. I'll try to be quick. So I run a company called Sankore. I think of myself as both an entrepreneur and an investor because about 9 years ago, I started Sankore with my own money, and as well as I also went to entrepreneurs to fund me. So I know the experience that people go through starting their own company. But my company is an investment company. We manage money for clients. So I also see the perspective of the people with money who are looking to put it into businesses. So I think that that's a unique perspective that we bring. And so we over the last years have grown significantly. We now manage almost 25 billion naira for about 180,000 people. And that now makes us one of the larger pools of capital with regards to startups and so on and so forth, because we actually also encourage our clients to look at startups and just generally the ecosystem with regards to their portfolio strategies. About 4 years ago, even before fintech became a buzzword, we realized that the future of investments was actually technology. So we started an innovation arm, and the objective there was to invest in startups. Our experience investing in startups didn't go that well, which is something that...
Pause on that introduction. We're going to come back to what worked and what didn't work.
So let me finish very quickly. So key thing is, because of that, we've now started to venture build. So we build a lot of ventures ourselves, including AI bots for banks and even agriculture companies. So that's who we are. Thanks.
Great. Tomi, does Tomi need to talk?
No. I'm going to spend 10 minutes on stage.
Exactly. So we can he's done his own intro, right? Okay, so let's go back in. And Adia has started, and both of you have started this conversation. What worked, what didn't work? So Adia has come with her business hat. Let's just continue doing business, right? But let's even take stock. Let's reflect and take stock, because it's also nice to look back and say, as we want to venture into the future, which is what we're here to talk about, what mistakes don't we want to make again? So what are your worst experiences? Tomi, let's start with you. Your worst experiences.
Okay, I wasn't thinking I was going to go first, but to be honest, I mean, we had done AO before. This was the second time we launched an AO, and there were a couple of issues. I think one of the things we saw was, personally, I didn't know that there were many hackers in Nigeria. I think the number of attempts to break into AO it's ridiculous. I just didn't believe that we could find this many people trying to break in. Then two was what we've learned about, I think everything we thought about the unbanked in Nigeria was wrong when we started. And I think once we started the experiments working with unbanked, we sort of relearned everything from scratch. And I mean, we enjoyed the experience. Well, it was painful, but we enjoyed it because now we're able to relaunch something that could, So I think those are the two things we sort of learned.
Great. So let me switch it a bit. Gbenga.
To add to what he just said, right? For me, what didn't work was the fact that I had to unlearn everything I've learned before as well. Startups are hard, to be honest. It's not like working in a corporate. Corporate is different. You go home every day, you go to bed well. And, and the next morning, you start again facing the problem. Startups, you don't sleep. I'm sure Tim can address it. We don't sleep. We don't sleep in startups. So it's hard. Also, I realized that you can't copy and paste culture. So I realized that very, very, I can't say I want to copy and paste the culture that was in the Google where I used to work and put it in Flutterwave. It doesn't work that way. you have to build a culture for the company you want to build. The outcome you want to realize, you have to build your own culture for that. You can't copy a culture from a bank or from another startup and say, I'm pasting it doesn't work. You have to build yours from scratch. That's, yeah.
Okay, Adia.
So RT on the switching from corporate to a startup, I've really had to step up my face beat just to look sane when I get up because it's a different life. But I think for mines specifically, the first approach to the market was a bit difficult. I think they came as a pure tech company and with what I might describe as an engine business. And Nigerians don't really consume engine businesses very well. You've got to build the car around the engine, allow them take it for a test drive, let people recognize or be able to articulate your value proposition in terms of this car gets me from point A to point B, right? So, but the thing is with tech, engine businesses are so prevalent. You know, people talk big data, people talk AI. Oh, I'll come sell you a capability, and people don't like that. So. Mines didn't really find very strong traction until they found a partner who, first of all, understood, okay, you've got an engine business. I know the kind of car you can build, but we're going to build this car before we solidify a relationship with you. And you will build it here in our office so that we can see you and we can make sure you're not running anywhere back to this California that you people are from.
Well, that was you too, no?
It was. I was about to confess, yes. So I'm in this funny position of being in the company that gave Mines his first contract, that launched the service, and then having to cross over and eat my own. I can't call it cake. It's not that nice, but yeah. So that's what I would say.
Okay, great, Yvonne.
Well, from an investing point of view, I think what didn't work was a hands-off approach. I remember one of the investments I made, I won't mention the name, and you write a check and you're like, oh, how's things going? It's like, the money has finished. What? The money from last week? Yeah, it has finished. So, and it goes to some of the challenges that we talked about, like, the environment that we live in, the infrastructure that doesn't exist, the business model that you have to keep refining. And from an investment point of view, it was like it now had to be a hands-on thing. And, that's where the domain knowledge comes in terms of let's do it this way, let's switch it this way, let's be more solution-oriented.
Okay, and finally, Titi.
It's exactly what she's saying. It's that also from an investment perspective, we just found that we didn't feel, because we have a fiduciary responsibility to our investors to ensure that we're thinking of a return. And there weren't enough investable businesses. There weren't enough people who knew how to run companies, because an idea is not enough. Actually, I think a lot of people just think, oh, I have this great idea, it's going to be, but really a lot of people are out there building, features, just as she's saying with regards to the engine car thing, or, they build something really great but don't know how to make it into a company. So we actually started out giving away money. Then we moved to bringing them into our office and investing in them and trying to handhold. And then we just moved to building our own companies because we felt like, look, we know how to build a company. We might as well also do that. So we find that over time we've realized that the key advantage is the ability to build an institution. And once you identify the problem, applying that just sort of helps. So that's it.
Okay, so startups in the room. The summary of all this is sweat. Sweat capital, right? Because before they give you the money, right, they want to see that you're vested. And then when they give you the money, they don't want to say that 1 week later, right, it's finished because you didn't manage it properly. So again, I like what Titi said. You're not building a product. You're building an institution. But when you focus on the product, and you're technology people, you're high on your own supply, excuse me. Right? You focus on the product. Oh, my product can do this, it can do that, it can do that. No problem. But then, how is it going to make money? How are you going to collect the money? So it's not, the product is good. And if you look at what they all said as well, the environment we're working in, don't make false assumptions. So you see a Flutterwave today. They got $20 million. Yes, I will get 40. How? Have you asked, how did you get the first one? Or how much do you even have? Like Titi said, she started with what? Her own money. Or do you have 3 Fs? Does everyone know the 3 Fs? You know the 3 Fs? Family, friends, and fools. They're your first port of call. You didn't know that? Okay. So basically, I think listen to what they're advising you on, because you see, you don't want to make the same mistakes. And I think that's why we're having this conversation today, so you can really understand that, yes, you know, the numbers look very nice. How many people won't want 300 million? Okay? But then that 300 million, Gbenga, do you sleep? His glasses are down. Because you see, not only, what he doesn't also tell you is that you're working across time zones, cool? So as San Francisco is waking up at, he's going 6 p.m. San Francisco is waking up. He's going to have a ton of conference calls. He might be there till midnight. You guys want to go to club. Blankole has said you can go to the pub at 2, right? Okay, so let's... But I think, again, I like what Tomi said. You see, we have opportunities in Nigeria, right? And I think let's now start to look ahead, because Adia started, and I want to start with the regulatory concept in terms of the challenges and how do we unlock these challenges. We have almost 50 million unbanked Nigerians, whether we like it or not. Some are economically active, some are not. But then, how do we even get people on the boat? So Tomi is trying his own experiment. What do we need to tell the regulators? Anything. What do we want to tell the regulators?
So what I see often is that entrepreneurs walk into conversations without leverage. All right. So the regulators don't care about tech. They care about value generated for the right people. Okay. So not value generated that is not tax paying in Nigeria. Value generated that is keeping wealth in Nigeria. So I think very often people show up with some sort of sense of entitlement to attention, where you have no business, no revenue, no customers. You've not pushed any of the publicly stated agenda or even the privately held agenda. Okay, so what I said before still stands when I said, okay, look, if I walk into a regulator with a company like Titi's that has, you know, several billion under management, a company like Flutterwave that is processing X million transactions per month, us who are lending, a Yowo that is processing transactions as well. It's a different conversation, right? Then you sit with the regulator and say, this is the money that Nigerians are exchanging across our selected businesses, right? Rather than we need fintech regulation to work for us, right? And they need to be informed, right? You know, in some cases, the regulators don't actually work in industry. So they have to be taught, they have to be educated, right? I mean, I don't know many people past a certain age and stage in their career that can have a comfortable conversation about artificial intelligence or machine learning. It's actually quite frightening when you think about it, right? So the concept of it itself, even when you are young, beyond when you're talking to someone of a different working generation. So for me, I would say leverage up and then go have the conversation.
Okay, leverage, converse, Yvonne. And I think one thing you should remember is that it's not just central bank. There are different regulators in this space, right? There's SEC, there's NICOM, there's PENCOM. So there's a broad spectrum of regulators. So Yvonne, kick in.
I agree with Adia, and there's something that she said I think it's important, because if we take a step back and we decouple when we talk about fintech, right? So if you talk about financial services, the thing that you also have to remember that this is about people's finances and their livelihoods and whatnot. So in some sense, when you think about a regulator as they're not innovative, they're not forward thinking, in some sense, maybe it's a balance, right? Because, I mean, if you objectively think about it, you also want to make sure that, you know, there is that duty that, you know, people's funds are being safe guarded, right? You know, and so what Adia talked about is important, just helping them understand, because what fintech brings or technology brings, of course, is that innovation and the efficiency and all the good things that come with it. But it's a balance, and it's helping the regulators understand that, you know, the innovation is not to come and really disrupt things in such a risky way, because again, you're thinking of people's funds and the safeguarding and whatnot. So it's really to help them understand that, you know, the innovation is supposed to add value, right? And so that constant engagement is important.
So let me ask, quiz, just a minute. How many of you have read CBN Act? How many of you have read BOFIA? How many of you have read ISA? How many of you have read PENCOM Act? How many of you have read NICOM Act and Insurance Act? Okay, so these are the legislations that we're also constrained by. So when you think about CBN, I go and read any CBN policy today, they will tell you under section so and so of the CBN Act, right? Looking at financial system stability, this is why this policy is coming out. So again, we cannot break the China because we want to do fintech. Right? How do we manage the two? Titi, go ahead.
So I exactly what you said, I think, is key. I started my business, as I said. I actually started thinking about it 10 years ago. And I wanted to build Nigeria's largest hedge fund and so on. And I, first of all, just registered it in Cayman Islands. Then I realized I can't grow. Thank you. But the key thing is I can't grow in Nigeria without regulation. So I did exactly what you said. It's important that the way you have a conversation with the regulators is, first of all, come into the room and have a license or understand what's going on. The first thing I did was I figured, how would I actually be under the system? Understand the system and be part of it in order to change it from within. And Nigeria is literally one of the easiest places to get a license. I know there might be people who disagree. But do you know SEC has licenses that allow you to give investment advice that all you need is like 10 million? What other country can you get licenses that cheap? Up till just recently, you could collect money from individuals for 20 million with the microfinance license. There are a lot of people who have raised enough of this money, but they're spending it on t-shirts and offices, right? So at the end of the day, key thing, I can tell you, I hustled and was in a tiny office for the longest time because I wanted a license. And I actually went out and I looked for a place I could buy someone's license or partner with them. And it's one of the first things I did. And then talking to the regulators is a lot easier when you have a registration. They're very difficult to work with, but guess what? I literally will call and I'll say, there's this thing I want to do. Take, for example, we did a bot for a bank. We needed their permission to do that. And we literally spoke to them for a year and we got a no objection letter to do so. And literally it was the first time they'd ever heard of such a thing, right? But at the end of the day, we got our regulator, SEC, to approve it, and the bank got CBN to approve it. Jason is here with me. We actually went and presented to CBN this concept, right?
CBN and SEC don't talk.
Exactly.
So you have to bring them to the table.
Yeah, and you have follow-up meetings, but you can change it if you know the rules, right? I actually find that they are not averse to regulation. To innovation. In fact, they want people to do stuff. They want people to register to be on their committees. They don't have enough people to do this stuff, but everyone wants to do fintech, and you haven't read one of these things. How? I'm not even sure I would trust you with my money if you don't know the rules. So I think it's extremely important that we all realize it's not about just technology. Know the industry you're about to play in.
So that's part of the domain knowledge. You contribute, they contribute. Gbenga, you wanted to say something?
Yes, so 100% I agree. In scaling across Africa for Flutterwave, right, I've seen central banks of other countries. Uganda, Tanzania, Kenya, Ghana. Nigeria is like comparing the US to Zimbabwe. And I'm not joking. In Nigeria, I can still apply for a license. There was a country in Africa that we went to, and we applied for a license. After a year of applying, they said they don't have such. It doesn't exist. After 1 year, we had built the infrastructure, plugged in the technology. We want to get legit in that country. They said after 12 months, they don't have the legislation required to even license us. But so we need to understand. And when I saw, for example, the PSB license came out, and there were so many comments on Twitter and on everywhere about how the central bank is raising the bar. No, they're actually reducing the bar the way I see it. They just made it easy for a young guy in Yaba to own a bank from 20 billion to 5 billion. That's what happened. So it's not from 0 to 5 billion. That's the way I see it. Another view is we have an infrastructure and technology platform, and at some point we're building USSD for a bunch of our clients, and we need to get an NCC license. NCC said get a CBN approval first before you can come to us. And CBN gave it to us quickly. We just applied, and they did. And we had to go present, explain why. Of course, we have to explain in line with the regulation to show how value will be created and retained for Nigeria. There was no tech speak in our presentation. There was no USSD can do fancy things, no. It was about how we can help the country create financial inclusion. It was about how we're going to, and we showed them the process, the risk, the mitigant, and they gave us the approval. They went to NCC as well again, and NCC also gave us the approval. My point is, CBN is actually very, very open compared to what people think. And like she said, you have to do it from the inside. You have to understand that this is people's monies we're playing with. People use their card on a further infrastructure. We need to ensure it is done the proper way. And there must be somebody that we all answer to beyond our board. That's the way I see it.
Okay, so remember your issue the other day, Arik. Because those are some of the risks as well, right? When data gets in the wrong hands for whatever reason or the other. But Tomi, you mentioned this issue about hackers and vulnerability. What are you doing to plug the holes? Because that was also one of the first questions we talked about when Coinbase was, Bitcoins was talking about his product. What are you doing? Because again, they will always be there. EFCC told me one day that a whole lot of Indians moved to Nigeria. And that's the work they do. Just coming to hack because it's a prime market. Because at the end of the day, a lot of us are not as secure as we would like to be, thinking that we're not there.
Sorry, and just to add to that, the insecurity is coming from the fintech industry, according to central bank, right? Because the gaps in the system, right? The recent fraud that's happened even in 2018 has come from fintechs connecting to switches, connecting to banks, and money evaporating.
Okay, so
right.
Tomi, let's start with you.
But sorry, before what I was going to say to jump on, the TechCabal team, did we actually invite CBN or SEC or any of the regulators to these meetings, to this panel today? Right? I think we should. Right?
We can do one with regulators.
I think we
a
can.
Special one with regulators.
Even if it's not special, right? Between Musa and Aisha, I swear I see those guys more than I see Akechi sometimes, right? Every event to do with financial services, they are around. I'm on a first-name basis with people in CBN, and I think we should be too.
Okay, so Adia is your hookup. Tomi.
Sorry, before you start, the Arik issue wasn't the Flutterwave issue, by the way.
Well, you see, you were wrong. You see, what I'm trying to say is that, Gbenga, at the end of the day, there's a reputation risk.
Yes.
And we don't know Gbenga. Exactly. We don't hear Gbenga's side of the story. So again, even the optics of all these things, and what does it do to the market? These people have come again, no computer will steal my money. And everybody will put their money under the bed. So that's the way you need to think about it. So guys, we need to open it up to how long do I have left? I don't have time. Tomi, sorry.
No, that's fine. That's fine. I mean, so there are standards that once you follow, sort of like reduce the effect or reduce the ability for these attacks to be perpetrated. And I think Adia is right in terms of saying that fintechs really are sort of like the problem. Well, in quotes, of the problem now, because obviously there's so many of them now. And if you don't take cybersecurity seriously, then it becomes very easy for attackers to sort of break in. But I think what we are doing really at AO is to ensure that we sort of follow all of these standards and all of these guidelines. And when you look at some of the regulations that maybe CBN has put out, for example, there are things to help even reduce the risk. You can't totally mitigate the risk, but you can reduce it. So, for example, things like if you haven't done this much KYC, you cannot allow this user to do this much transfer. That just helps reduce the possibility of your exposure and everything. So I think we sort of follow those things, and I think if everybody follows that, I think we should be in a good place.
I just want to make one point, because I think it's also important to think about it from the user point of view, because even as fintechs, we want to make sure that there's uptake in all of our products. And I'll give you an example, right? I used to work for, one of the biggest and oldest banks in Nigeria. And a branch here in Lagos, the guy comes in, older guy, and he swears that the ATM card we gave him does not work, in cursing and swearing. What's wrong? It's not working. This thing is not working. Okay, can you bring out the ATM? He brings out his card and it's laminated. No, we laugh, right? He's laminated it with his password 1234 on the piece of paper. Now, when I first started working for this bank, long time ago, we could not beg or bribe people like those to even take those cards from us. And then, almost a decade later, now he's had the card, it's just that it's laminated. But so you start to also think, so there's different stakeholders in the ecosystem, right? There's the regulator that you have to engage, and like we said, you have to do it from within. But there's also customers, and we talk about the unbanked a lot, but there is even with the bank, there's still customer education and just, quite frankly, a comfort level with this fintech thing. Because again, with every business that we're building, we want that uptake. So you also have to keep that in mind. And a lot of what we talk about also helps to drive that comfort level with these guys.
Thank you. Before I open up for questions, fun fact. We have 35 million BVNs, right? What percentage use cards? Pardon? 10%? Yes, less than 10%. So what Yvonne is saying is so true. We still have a deepening problem, even amongst those who we feel know are banked, etc., etc. So I'm going to shut up now, and then I will let you ask questions. Okay? Now, and we have questions from the other speakers.
How do you want to?
No, you're in charge.
Oh, I love it. Okay, so.
Questions or not comments, please. With a question mark at the end.
I'm going to start from the back.
Yeah, RT to that, please. Thank you.
Let's go.
One of my first questions was, were you actually saying RT? Yes. Because you said it one time, I was like, nobody reacted.
I try to be cool. I do try.
Retweet. My second question.
Sorry.
When I started Bitcoins and everyone talks about regulation, my reaction is always, make I just calm down, build, waiting I get built first, right? But I'm in a space where it's like they can wake up tomorrow and just ruin my life. And that's like 70% of the reason I don't sleep. Somebody would just send me some old circular the CBN sent a year ago, and they're like, Timmy, they've come for you. So like, how do you navigate being in a position where you are very exposed to their whims, while still trying to low-key and build till you have leverage?
Okay, so let's take a couple more, then we'll bring it back to the panelists, okay? So otherwise we'll be going back and forth.
So who's going to remember these questions?
These people are computers now.
Okay.
I want to first a big thank you to the panelists. This is really amazing. So recently, SEC approached Ventures platform to say they want to do a fintech sandbox. I want to know what you think about a fintech sandbox for startups. And secondly, what do you think about a startup policy or a startup bill to actually help startups across board?
Sorry, I have a question. What was the fintech sandbox?
We will explain it. Don't worry. Don't do that. We'll explain it.
Are those two first, or?
Okay.
Yes.
All right. Go ahead. So
okay,
the CBN one.
Let me start with Tim's question. I understand where it's coming from. So, what we have done in my own experience was when I go into areas that is maybe unregulated, they're not there yet, right? What I do is, what we've done is, one, we engaged a very, very prominent legal law firm to give us legal opinion on regulation, right? And sort of like predict the future for us, right? Now that legal opinion becomes what we then use to engage regulators. Then even though they've not said yes or no to what we're doing, we let them know our progress. So we say, hey, we're doing this. This month we've done this. We saw this risk, we get this. We give them a report like we are regulated. So by the time they get regulation, they call you first. They go, hey, come. How do we build this regulation together? That's what usually happens to. The draft policy, for example, that you saw from CBN as an example, they send it to the banks, even to us, say, hey guys, what do you think about this? So that's the way I think it should be done. And if you look at the guys in the US like Coinbase, they did the same thing as well before it got to where crypto became. Exactly. Yeah. That's the way I see it.
I'd suggest you try to have a conversation about your product without saying cryptocurrency. Focus on the problem that your tech is solving and not the tech itself.
Yes.
Train yourself to have a whole conversation without saying crypto.
And just realize that you're using it as a form of exchange, not necessarily an asset, which also has different, because then you're talking to two regulators. You're talking to SEC or you're talking to CBN. All right, so know how it's about choosing your words. But also, going back to what you said, Gbenga, in terms of how did China do it, right? Because China have VAT, right? And nobody knew what was going on. So what they did was that, the CBN, the Central Bank of China, come and tell us every month, give us progress, right? Show us what you're doing, show us how it's working, let's learn from your challenges and your risks and how you're managing it. And that's how you build regulation from ground up, okay? So, Titi.
Yeah, actually, I think that what I would suggest is every time you want to do something, try to find the license or registration that applies to what you're doing. Because I don't even think I would agree that what you're doing is not covered at all. You're building an exchange that's actually regulated by SEC,
now.
right? So
it's a bureau de change. You're exchanging naira or Bitcoin.
That's the point.
Bureau de change.
No, that's the point. That's the point. That's exactly. That's the point I'm trying to make.
Or even
is
the closest.
The point I'm trying to make is there are several licenses you could get, and just go for the cheapest one. There's the exchange license. You have a wallet, so you're collecting money. So you could probably get something that allows you to hold money. No, it's true, because what you're doing right now, you remember I told you earlier that when I started, literally, and I was probably around your age as well. So literally my first thing was, I'm not going to be going through that stress of not being able to sleep and someone shutting down my business. Read the law and then figure out what's closest. And before you get the license, go find someone who has that license and partner with them. Yeah? So many people will do that with you. So remember, there are two key things I already see there. And what she says is right, is as long as you're not really seeing crypto that much, just focus on the fact that it's an exchange, and then focus on the fact that you're holding money. That holding money is what CBN can get you for. And there's so many people you can partner with to hold money. So that one is not even a difficult problem. So if you ride like this still, they will shut you down. But you can partner with a ton of people. I know Piggy Bank partnered with banks before they now even got their own banks. You got to do that. And it's actually a show of your own knowledge of what you're playing in. If you don't do that, investors should be worried if they put money in you, because you're not thinking of the fact that you could blow up their investment. So there's a license that covers that.
And collaborate for impact. That's the bottom line. So the next answer to the next question.
So the next question was with Ventures Platform.
Yes.
Yeah.
Fintech Sandbox.
Fintech Sandbox, fine. It's a table with the regulator on one side and us on the other side. So anything we are doing there, even if it's small jobs, is fine, right? Because after you finish eating small chops, maybe you still do the work, right?
Okay. Does everybody know what a sandbox is?
They'll be fine. This is if you don't know what a sandbox is, you shouldn't be here.
You know, you used to go to playground, right? Yeah. You go and play in the sand. That's the sandbox.
Google is your friend. So could the regulator, all regulators involved, be supported to create friendly regulation? Absolutely. But I think there must first be a table where we are across from each other. So yeah.
And this is part of the engagement with the regulators and knowledge building. Now it's a sandbox. So somebody on the regulator side hears the word and has to go get the definition, right? So it's part of this engagement with them and helping them to also, deepen understanding of what this whole thing is.
But they know now. I wrote a white paper for them last year or so to help them understand.
Thank you, man.
So Yvonne, startup bill. Do we need one? Yes or no?
A startup bill. Wow, that's an interesting question. I mean, my intuition, I guess it would. Exactly. I think that would just be the question. What problems is it solving? Like, what are the because again, if you one of the things that I noticed, if you look at the raft of regulations that have come up, the payment service banks and even the classifications of the payment service providers, you'll notice that in the paper the word fintech is used interchangeably with payments. And so that's why, so when you talk about a policy paper or an overall policy paper, I'm kind of squeamish, because when you even have just some of this existing policy where, even there's not that nuance, right, you start to wonder. So I think it's like baby steps, so to speak. I think, what we have right now with the payment service banks they're good, the payment service providers, but kind of an overall policy, because again, the industry is still evolving, right? We're still going to have different use cases, different business models come up, and we are still trying to figure this stuff out.
I think a bill is bigger, so we need to be mindful of that, because you're looking at the legislative arm of government. More questions, please.
Okay. So before I get those questions, I do have to say that as technology people, because I used to be in professional services, and as technology people, sometimes you go, I know this thing, I don't need my friends that wear suits. Now is the time to be friends with those people because they go through the ranks and they're the ones that the regulators cannot trust before they trust you. So if you're coming in with them, it's a better argument, and you don't have to read all the laws because we've already read them. So anyway, okay, so we're at the back of the room, we're coming forward. So yes, sir.
All right, thank you very much. So this is a fintech meetup, right? So I want to say this. So most people in fintech, they use the tech.
Is it a question or a comment?
Yes, it's a question.
So get to it.
All right.
Just
so
ask the
this is my
question.
question, right? How should a fintech balance its talents, finance, and tech? That's the question. Then the second one, in tune with that, is this. So should fintech startups also play where traditional finance firms are playing?
Can I answer that? I'm really passionate about
Second,
Okay, Titi.
we need one more on this side,
Titi wants
or
to give you a very blunt answer. Go.
no? She wants to give a
No,
blunt
expectations
answer.
are high. Okay. By the way, this is something I talk about a lot. The fact that fintech, at least from like the U.S. perspective, actually was led. At least the most recent innovation was led by finance people. By the way, can I just a quick? How many people in this room are actual techies versus not? Like, where your background is technical. Interesting.
Just a coder or a programmer or whatever.
So one of the things I'm actually very passionate about is for us to stop making technology something that's only owned by technical people. Technology is an enabler for every industry, especially Nigeria, where we are right now. Everyone has to be involved in technology. And one of the things that I really see is this divorce of the fin from the tech. It's almost like, no, it's true. It's almost like only technology people are looking at fintech. Truth is, what that leads to is a lack of deep insight about the problems that need to be solved. And that's actually why we're where we are today, where 40% of people are, okay, let me get a connection to Flutterwave or InterSwitch and I have a business. No, there's so many problems that need to be solved in finance. And when you don't see enough finance people realizing that technology is not this box that you just won't understand what's going on, that's a problem. So to directly answer the question, what you're saying, it's the balance, is I think that the finance bit is as important, not more important. Yeah, because you also don't want finance people who are not going to really understand how technology can change their business. Our innovation platform, for example, is actually a few finance people and a lot of technical people, but there's a very strong understanding by the technical team that they have a lot to learn about the sector that they're trying to fix. You can't go into agri-tech and not know about agriculture. You can't go into any of these other tech areas and not know about the sector. No, but see, that's the thing, is it's extremely important. Like, if you look at, the world's #1 robo-advisor, it was started by an MBA who realized there's a problem to solve. They have chief investment officers on their staff and so on and so forth. You have to understand that. Yeah, exactly. So at the end of the day, I think it's extremely important that if all you have is the tech, go look for that fin. It's extremely important.
And please don't forget what Gbenga said. Get the legal advice. Sometimes all these things cost money. But if you want to do business, you have to spend money. Okay? So you can't go to CBN in T-shirts. You can't. Even Mark Zuckerberg had to come and wear a suit.
No, but even legal firms in Nigeria now are very startup friendly. They're giving free advice.
Exactly.
So, you can walk into the likes of
Olaniwa Ajayi.
Yeah, Lukanoye, but they're the biggest firms in Nigeria.
In the Fintech Association of Nigeria, the highest number of members are lawyers. So they've come to the party. They've joined the ecosystem. Okay, quickly, Gbenga.
Even to add to what she said, one thing you also realize is that in my own experience, when you write software and you build good software, you typically don't go back to it until there's a bug or you are making a new update. But every day in Flutter, there's a team of people in our company today that are doing the finance work every day. So if you don't have those finance people, right, you need to understand liquidity management, treasury. Tech doesn't teach you those things, right? Technology is amazing and great, and software is an enabler for every industry in the entire world, right? But in my own space, for example, with tech company, yes, but we have a ton of people who are doing settlement for merchants, who are managing treasury, fund management, compliance. It's a whole ton of people doing this work, right? So technology is great, but those other things are required to build an organization, an institution.
And one of the benefits of fintech is that they're closer to the edge of the market. So if you're not, and the fintechs that succeed are the ones that are solving customer problems. So if you're not close to the edge of the market and you're sitting in your, just writing the code and thinking that, oh, this is the answer to the problem, you won't succeed. Okay? Questions?
Yeah,
you're the one in charge, so you're the one that will tell us when to stop taking questions before you tell me to go.
Hi, my name is Dotun. My question is, how can Nigeria benefit from financial technologies compared to other markets such as America or Europe?
We have no infrastructure. So I think I have a thesis that digital infrastructure can in many ways replace physical infrastructure. So I think that's really what tech does in every industry. So we don't, and it puts us in a position where, you know, we can actually leapfrog, right? Whatever that means at the end of the day. But I think that technology provides us an opportunity to catch up and build a lot faster than those that took the brick and mortar route.
And we can create jobs, we can grow our GDP, we can do many more things. Because when you listen to what Tomi said in terms of creating agents, so there's a facility now that the banks are giving, SANEF, right? That would bring out 500,000 agents by 2020. Those are jobs. Because people have to be there at the edge of them, at the last mile, to give out this money and to do the Kiko work that he needs to do.
I think, and just to add to that, I think an easy framework is like, you know, I mean, an easy exercise for all of us is just, okay, list all the problems Nigeria has, right? And you go down that list, and just like we've said, technology is an enabler. It comes in somewhere and unlocks value.
All right, good afternoon. My question is targeted at the CEO of Flutterwave. So I follow you guys, and I know you guys recently integrated Ripple. So my question is if you can shed more light on how that is going in terms of the uptake, and if you'd experienced any regulatory burden with CBN, you know, working around that platform. Thank you.
So Ripple is not really for this market, right? Because in Nigeria today, the regulation has not given a clear direction on that. So Ripple is for the US market and the Kenya markets that we also operate in. But speaking to, we basically built the African gateway for Ripple that allows a Ripple customer anywhere in the world to be able to pretty much use our infrastructure to process payments to Africa, right? Yeah.
Okay, so talking about the whole cryptocurrency stuff, I actually run
Question.
Yeah, I'm trying to get here.
Question.
Hurry. I run an OTC exchange on Telegram that has been running since 2017. And what I'm trying to ask is, these guys are doing a lot of volume. Like, when I sit down and calculate it, maybe like $1 million a month.
How do you want to do your own volume?
Yeah. What I'm trying to figure out is, like, we just created a platform, a group for people to just come together and share value between each other. And they are doing a lot. Now, what I'm trying to figure out is how I can tap into that volume, into my online platform that I'm trying to build. Because people have that trust with their local system already.
Okay.
Are you asking them for a business plan?
Or go and look for a suit that will help you conceptualize and redefine your business model. Any other?
One customer at a time. I'm not even kidding, right? So it's one customer at a time. So honestly, you have to do that work of converting people. And with every conversion, you figure out a way to get them to convert somebody else. Get the next person to convert somebody else. But there's no shortcut to growth, guy. There's really none.
So I would actually say that, okay, it's kind of a shortcut, but the shortcut, can you imagine this guy is telling you, I have people on Telegram that are doing $1 million in, there's a company that is interested in partnering with you. In fact, talk to me. Because literally, you don't have any of the investment licenses that would make you just create your website. But as I said, you can partner with someone who can work with you. One of the key things that I actually see is this obsession with everyone thinking, okay, they will be the next Zuckerberg, they will be the next E. Start small, yeah? you may not be able to do it yourself right now. Maybe you don't have the 500 million you need for the capital requirement. But guess what? Someone has that, and they can partner with you, and you can co-own it, similar to the ARM situation and so on. So there are ways to do this. So I just encourage everyone to really just understand the regulation and understand that there are people who already have those licenses who don't have what you have, which is people doing that much volume, or they may have it, but they want to grow, right? So it's really, that one is not a difficult thing. You can monetize that tomorrow, seriously. You're one customer. Yeah.
Okay.
Yeah.
Great. Hello. Talking about digital security, are we prepared to combat these security breaches? And is there any ongoing conversation with the fintech companies and the governing bodies?
So for security, there, like you mentioned earlier, there are existing standards today that you have to follow at the minimum. So you're a payment company, you must be PCI level 1 certified, level 1 or level 2, very critical. You must have PADSS, whatever application that your clients are using to do the has been reviewed by somebody else that is not you. You must have ISO 27001 license, which is very critical for security and for processes that you're following in your company. We have those things in place as a company. You are then on the path to security as a service. The next step is then maybe have a pen tester checking your platform for you, have white hackers working with you. It's a journey. It's not one thing that you do and you stop. You do it, you continue to do it across as you grow, and your risk are going to be increasing as you grow, right? So today you look at your own risk, then your third-party risk, then and like that. That's where it sits. Maybe.
Yeah, well, just to clarify one thing, I mean, when I spoke about cybersecurity threats, I didn't mean that we've been hacked, right? So what I'm just saying is, I mean, when we look at our logs and our analytics platform, we sort of see that there have been many attempts by people. But what I'm just saying was, we expected it, we just didn't expect the volume, right? That's what I'm trying to refer to. Like, we didn't expect to see this many people attempting to break into the system. But the point is, I mean, back to what I said and back to what Gbenga had said, is the fact that, I mean, there are regulations, there are things that you can do to sort of make it very, very difficult for people to directly try and hack. What they may end up trying to do is, like Yvonne had mentioned, is try and look for ways around the user to break in, right? And that's why educating users now becomes very important, because the hackers then find it much easier to sort of do social engineering around the user and use that to break in. And technically, that's not necessarily a flaw in the system, it's a user flaw. Right, I don't know if that clarifies.
I mean, it's fine. When I was talking, I wasn't referencing particularly your company, but there was the thing with ARIC, there was the other thing with the ISP company rerouting their server via China. So, I mean, there's this... That
was main one, right? The main one incident, okay.
With, like, hacking and digital security. So I also wanted to know if, like, the government is really aware of this and they're, talking to you guys.
So they are. So I'm on a committee for setting a fintech roadmap for SEC. And I know that one of the breakout subcommittees is actually just focused purely on user security and so on and so forth. And what he's saying, I mean, what they're saying is exactly right, is that, like, take, for example, when we started building stuff, we're not a payment company, but we started the process of PCI DSS right away, because we wanted to hold ourselves to a higher standard. So this committee that I'm talking about, literally, what this means is across the regulators, they're all going to come to some standard that is now going to be the standard across all fintechs. So everyone has to be ready for that. It's the biggest issue that everyone talks about at these meetings, is how are we going to ensure that all these fintechs aren't going to come and just crash the system. And it's a valid concern. I'm sure, even though you guys, you want your fintechs to make money, I'm sure you don't want to put money in something where you will lose value. So it's something we all have to worry about.
You need to be mindful. This is what Adia, Titi and Yvonne spoke about, building your institution. The institution is looking at your risk management, putting in the right precautions to ensure that people know that you have done it right. So this issue of self-regulation or self-governance, you don't need to wait for a regulator to come and tell you this is the right way to do it. So if you go back to, I think it's the World Bank or one of these people, they have these responsible principles for banking, and I think Axion has the same thing for microfinance banks, which they call smart campaign principles. So how would you behave in a responsible manner? You need to think about those things, because you also want to attract foreign funding, right? Foreign funding is looking at global practice. They're not going to give you any breaks that, oh, you're operating in Nigeria, so the standard should be different. You have to aspire to ensuring that that fiduciary responsibility can go all the way down the value chain.
All right, and now we have our last question.
Hello, guys. My name is Taya. Well, I think first of all, I should say thanks on behalf of everybody. This has been really insightful. The quality of thought has been amazing. And perhaps more importantly, you guys are talking from practitioners' perspectives. Now, here's my question. I feel like the last mile across our continent, and especially in Nigeria, is a key issue. So we talk a lot about everything else apart from 1,000 naira worth of transactions within the woman in the market and the one. So how do you guys envisage that being solved across the continent? Well, not just across the continent, across Nigeria primarily.
Okay, so there are...
The last mile. How do we solve the last mile
So
issue?
we've done all these wonderful things on the apps, on the online
we've done all the
platform,
supply
everything.
side, right?
So
So
the
how
question
do we
now
take it to
becomes,
market?
how do we get it to the woman on the street?
There are actually quite a few of us that are looking at that section. So there are a few assumptions that you've made in your comments that don't apply to mine. We make loans of 500 naira. Right? So last mile is very tricky and an expensive problem to solve, but it's important for you to focus on what the last mile needs and why, right? It's within those whys you then find those solutions, right? So we're working on a bunch of different ways to continue to push that far into the market. I mean, if our goal is to build infrastructure for lending that anybody in Nigeria can use, we must have reached into the last mile. So we're thinking through a bunch of different things. But like I said, we're already lending to people that, in the order of 500 naira to whatever, to 100K. So
It's a very good question, and we didn't really get to the topic of, kind of what the future looks like and the... okay, awesome. But again, and I think there's a theme that has been coming out, so I used to work in an old generation bank, been around for a long time, has a distribution network. So when we talk about partnerships, so you think about that last mile, that person you're trying to get to, and the first question is who has gotten to her, right? Is it Coca-Cola? Is it a distributor? Is it somebody else? And then the question of partnership and riding on that, comes in, right? So those are kind of, some of the obvious, solutions to that. But again, it's understanding that these are things that when we talk about infrastructure distribution that still has to be built. But if you talk about today, it's somebody has reached that person, and then how can you piggyback off that infrastructure?
Okay, so let me just share something with you. We are just concluding a study that we looked at what does it take to get to the last mile and what's the economics getting to the last mile. So we talk about rural, urban, and peri-urban, and we use them very loosely. But what we discovered in that study is that there's two rurals. There's a rural oasis where you have a lot of economic activity and you have transactions and things, maybe near a bus park or something. But there's that rural frontier that at the end of the day, maybe the population is not even sufficient enough to even keep an agent running and operational and profitable. So my question now is, because I work with donor agencies, how do we bring interventions? Otherwise, what we're talking about, the headline numbers of 500,000, it's not going to work. But again, we have to also be mindful that you don't want to give people interventions and breaks in a peri-urban area that's a sweet spot because it's between the urban and the rural and people would sort of aggregate there. So it's about, okay, so let's even try and understand, do a deep dive into what goes on in the rural frontier, in that rural frontier, what is the economic activity, and then how can we sort of frame interventions that donors, because people are willing to help us solve the problem in Nigeria, but we don't have the evidence to say this is the problem and this is how we're going to solve it. Okay, so
can I add to that?
Great.
Sorry, I know you wanted to get to the last one. Yes. That last mile problem, we all know is a massive problem, but I would actually challenge. We all know that the people who solve it are really going to be a big deal in this ecosystem, but it takes a lot of work. And I think that's the issue, is that a lot of startups I see don't want to do the work, right? Well, the key, I'm not sure that I agree with that. I saw, there's only been one startup that I ever saw that was able to address the last mile, yeah? So just to let you know what it takes. This startup produces NFC cards, right? Because there's no data in the last mile. They're not going to use apps, all that kind of stuff doesn't work. They used NFC. They actually went to the level of collecting cattle tax from herdsmen, right? It was a lot of work. And of course, some of them actually realize it's too much work. I'm not sure I can do it. But that's what it takes. I would actually say to people to realize that most of the last mile that you're talking about work in agriculture. Yeah, so that's why for us, we've actually been looking at innovations around agriculture. There are ways to do it. There's an agriculture exchange, for example, called AFEX. Can you do things with AFEX that actually leverage off their infrastructure? Their organizations like NERSL and all these organizations that give seeds and stuff to farmers. If you're not ready to go up north and do some of these things, you're not ready to do last mile, and that's what people need to understand. It's not easy.
And then go and talk to a company like Cellulant. That's what Cellulant have been doing. They worked with the government in the growth enhancement scheme. They do it in Nigeria, they do it in Kenya, they do it in Afghanistan. So know your ecosystem, know the environment. Don't just come up and think that, oh, I'm the only one with the idea. People are burning, they're breaking ground in those places, real breaking ground.
Sorry, the last thing, right, is that I think what we will all probably agree on is that to get to the last mile is going to require partnership, right? Partnership is going to require sharing money. The Nigerian tendency to sharing money is very difficult.
Interchange.
No.
Interchange.
Look, I'm trying to enter this matter, right? Because what happens is you'll get there and you see like a 3, 4, 5-way split, right, on one service fee, right? And everybody's going to get there and feel like they are entitled to the biggest share of the pie. What happens? Negotiation falls apart. Right, so why does Minds exist? Well, because the telcos and the banks really couldn't talk about this gap of 60, 70 million people, right, that need financial services, and the path to them is their phone numbers. That's it. All right, so that work and those negotiations are very, very difficult. So I would also encourage you to keep trying. You will have to revisit these negotiations time and time again to find what works.
Bankole, forgive us, but you see what this just brings out is the fact that there is a lot of knowledge to be shared in the room, okay? Please forgive us. Thank you very much. So I want to come back to my panelists because our theme actually is Fintech 2.0. And we've looked at constraints, we've gone back, we've reflected. So where are we going? So the central bank has now created a payment system management department. So they've separated banking from payments. And that's a step. In other words, they're also recognizing that this is a different business and a different industry in itself. So they have that department. They've just created the Payment Service Bank license, right, and guideline. That means that carrier-led banking, financial services can start. So we're seeing the evolutions, but I want to take it back to my own panelists and say, so what's the big thing that you think that we should all be keyed into, or where do you think this journey is going next? What's the next bus stop?
Right.
I've asked you this before.
For me, I will go to the pain point of my customers. Right. So I want to speak from that pain point. In 2011, like Bankole said in his slide, Nigeria moved to NIP. 2001, sorry, and we're the first in the world to do it. Money moves to real time in Nigeria. It's like a norm in Nigeria. In the US, it doesn't move real time. Best is maybe end of day or next day to do a P2P transfer. So I see that also coming to payment settlement as well, where today when a merchant uses my infrastructure, they get their money in the next day at the earliest. 2.0 I see coming is they get their money instantly. So why will money move in the P2P scheme real time, and in the P2M scheme next day? So I see that's one area that I think will evolve naturally, and I already see some people in the space doing that right now. The other one I see is I don't think necessarily the fact that a telco has done telco before and have 1 billion customers, they can do fintech. I don't think so. In India, for example, there are telcos who have 200 million customers who got the PSB bank license type in India, and they were able to cover like 200K. So I think it takes a different set of skills to do fintech and to do telco, right? The fact that you can build an agent network of recharge card does not mean they can sell you money. Or you can give your money to somebody in traffic. I want to deposit money to my account, take 5K. Guy will take it and disappear. If you recharge card, you still get the card and give him the money. It's different. So that's the way I see it. So I see more fintech are going to emerge. That's the way I see it. I see smaller banks, niche banks will emerge. Maybe a Sankore will become a bank, for example. So that kind of thing, that's what I see.
Okay, thank you. Any other? Tomi, are you ready for your fortune tell? The crystal ball?
Well, I mean, so the thing is, I can't really tell what's going to happen, right? I can't say, but what I think should happen, but I see the difficulty in that happening, is I think money has to really be digital. And I think until that problem is solved, we'll still keep having these issues. Until we can get everybody to trust that digital currency is actual currency, many of these issues will still exist. So I don't know if this current wave of fintechism would solve that. Just like Bankole had mentioned, where it was e-commerce in 2011, and all of a sudden right now it's fintech. I don't know if in this current wave we would solve that problem. I think Bitcoin, I mean, sort of like leapfrogged us closer to that point. But obviously when Bitcoin became very popular, we sort of have seen the issues with Bitcoin, right? And I still feel there's still that one more thing to be done. I don't know when that's going to happen, to be honest. But like I feel the real future of money is when it's 100% digital. And then we can really solve all of these issues that currently exist.
Okay, so digital money is your... Yvonne?
So I used to work in a bank, so I look at it from the point of retail banking. And I mean, different countries have different development cycles, but usually in retail banking, growth is triggered by kind of mass opening of like current accounts, savings accounts, right? Which is why when you think about fintech, of course, the payments and the transfer of value was kind of the first problem that people start to pick at. And like GB said, there's even still more that we can do, right? Now we can, Bankole doesn't have to go to the woman to scratch like 500 cards, you can do that digitally. Now we can move payments instantly. And there's still more even on the back end. And we're starting to see that. And we talk about this question within the context of Nigeria and then Africa, we're now starting to see, more of, the banking products. So now the savings guys are there, right? Guys like Sankore are starting to look at, investment tech, so to speak. So if you look at it from kind of, a retail banking perspective, we are kind of following the wave. We started with kind of, because like I said, retail banking, the growth is triggered by mass openings of current and savings accounts. And we see all the technology solutions around that. And now we're starting to move to other banking products and then other customer journeys that everybody's also starting to digitize. So that's how I really see, Fintech 2.0.
Okay. Titi?
So when I try to figure out where we're going, I like to think through where we've been. And, everyone has said this. We started with e-commerce, right? And the big problem, we all remember when Konga's numbers came out, we were like, only 200K people, how, Then they're like, oh, okay, the big problem, maybe the reason they're not using is they can't pay. So let's solve payments. And then with payments, many payments companies actually failed. So then we're like, okay, maybe the problem is people don't have money. So let's lend them money. So now there are lots of lending companies. But I think we're moving towards the core problem, right? Does anyone know what Nigeria's problem is? We don't have money, In other words, the problem, and that's the limiting factor for fintech. There is no wealth. There is no savings. There's no pool of private capital. People are poor. Yeah? So until we solve that problem, all of this, we're just, So what I see happening... No, it's true. So what I see happening is as we go, and by the way, I already hear people like mine's also talking about this problem. We're all starting to realize that, look, people need to build wealth, but they also need to know how to build wealth. So literacy and investments and capital building is going to be key. So I see, and when you look at the chart of just sort of the types of fintech that we have in Nigeria, we're very skewed towards a few. There are going to be a lot of others that become big now. That's why we've been building a wealth tech platform for the last few. And you've already started to see, the likes of Piggy Bank, Cowrywise, and so on. People have an inbuilt desire to build wealth. That's why MMM was so big. Yeah? Do you know the stock market gets maybe 3 billion a day in retail investments? Guess how much goes to the lottery and sports betting? Yeah? 12, 4 times, right? People are blowing their money on just stuff that they know they'll never get money back, but...
they don't know that because they're hoping.
But key thing, right, guys? There are so many... Like, the biggest opportunity that I actually see is the possibility that we could aggregate the largest pool of private capital in this country that can be deployed towards wealth building. guess what? We're all sitting here about to go into a really rough 2019. I don't know if you guys noticed that the US dollar appreciated against emerging market currencies by 10% last year. It's gonna be rough, right? What's also about to happen globally is that, again, they're kind of reaching the end of their cycle. What happens when they do that? Risk off. Money is going to slow down coming in here. We have to rely on ourselves, right? If we're blowing, do you know the amount that I talked about with the lottery is almost as large, over 4 years, is almost as large as the entire pension industry. That's how much we're blowing every day on nonsense, right? Why don't we figure out...
It's not nonsense, so.
Sorry.
Some people.
For those who... sorry, personal opinion only. But can we find a way to solve our real problem, which is poverty? Can we do that through capital aggregation and financial literacy? Can we find ways where, I was very excited when I saw Farm Crowdy, because as I said, I really like agriculture, because guess what? All these poor people that you're talking about, they're in agriculture with dead capital. Yeah, they still store their wealth in barns. Yeah, so that's the big problem that fintech has to solve. And I really hope we actually decide to solve it. I hope everyone stops. Look, Flutterwave, Paystack, they have payments covered. Yeah, let's leave that space alone, right? And Ayowa, right? They have it sorted. Right? There's so many other problems. And lending is sorted as well. Pay later minds. Let's look at the next wave of things. And it really has to be these things that require a bit more work. Yeah? Require you to really actually think about its impact on wealth in Nigeria. Remove your obsession with, okay, how much I raised, how much is... Try to build some real value, right? And I really honestly hope that that's where Fintech 2.0 in Nigeria goes. And I really think that if we do that, then all these other bits of it will work, right? So,
great. Thank you. Adia?
It's kind of all been said, but to take some of what Titi said, she's right. We have been talking about the core issue, which we feel to be poverty, right? And the truth of the problem, right, of all the issues and all the friction in this industry is that people don't actually have money, right? And when you look at developed countries and what drives their economies, it's the middle class. And what drove the middle class is lending. Now, the question that I noodle on in between, everything else I've got going on is how do you trigger the growth of the middle class, right, by stimulating lending at a nano level? Because that's not usually how it works. It usually works with like top-down stimulation, right? So while we're waiting for that to happen, what happens in the middle, right? When Minds enables a partner, with one loan, what happens? Where does that money go? Who's the second person in the chain? Who's the third person in the chain? Who's the fifth person in the chain? Right? And like he said, money has to be digital for it to revolve faster, for us to turn it over faster, for its ROI to increase, for it to trickle all the way up to GDP. Right? So I agree with Titi 100%, right? That people are poor. People need to build wealth. People need to understand what wealth does. Right? If you sort of check everybody talks about tension in this country, right? We are stressed, right? And why are we stressed is because before 9 o'clock, you have 10 different problems you can have on any given day, right? So by 5 o'clock, the only thing you can think about is, have I eaten? Where am I sleeping? I mean, your needs are very, very basic, right? And wealth building will never come into that while you're sort of operating under that kind of stress. Right, so what I think is important for us to do as a country is to recognize how to address these issues so we can start building wealth. Because when you've built wealth, you can now start to think, okay, which problem that is bigger than what I'm solving today can I now solve? Right? You go from how do I build $1 million company to a $10 million company or even a $100,000 company. But if you're hungry or stressed or dealing with traffic or no light or whatever, you can't think like that.
Okay, but Softcom, our host today, says they're a thinking company. So we still... It's there, a thinking company, right? So we still have to learn to think. But I think that this, I like the way we've ended up, that it's not about a product. It's about how do we really solve the problems that are facing our nation. The late C.K. Prahalad said that there's fortunes at the bottom of the pyramid, right? So, and when we think about social problems, we're the only ones that can solve our problems. But then you find out that there's a lot of investment funding that's also targeted to addressing social problems. So please leave Flutterwave, leave payments alone, right? There are industry frictions in every single industry, even betting industry that Titi is talking about. Look at Baba Ijebu. He solved the last mile problem. Everywhere you go, you will see a red register and the white tarpaulin at the back. Yes, he solved the problem. But yet, why can't we piggyback? So again, let's also be mindful that the value chain is not for one person to do in its entirety. It's supposed to be shared. Focus on your strengths. Play to your strengths. Don't try and be all things to all men. Okay? And then again, let's look for problems that need to be solved. Titi loves agriculture. That's also that's what got me into this space as well. But problems need to be solved. When you think about that farmer, how does he take, he can't leave his farm. I've had the opportunity of going from Lagos to Ilorin by road before. And there's one road where trucks are sitting there for like 1 week. So you can imagine your tomatoes. Do you realize that 80% of the tomato value chain is lost? So what we're really fighting over is 20%. Let's go and unlock the other 80%. And those are the types of ideas Fintech 2.0, from what my panelists are telling me, should be solving. Because when we can solve poverty, trader money will give them money. Trader money too has to collect, because Jeep hasn't been able to collect. I know too. They've tried. They can't blacklist because it's not good for the government to blacklist in terms of BVN blacklisting. So again, we also need to be mindful of the fact that people are suffering in this country. Right? My friend got 1,000 naira. He's waiting for another 1,000 already. That's more than what people earn in a month. In Nigeria, yes. So you see, again, another thing I want to appeal to us on is, let's take off our Lagos lens. Lagos is not Nigeria, right? Take off your Lagos lens. Someone said to me once, there are 3 Nigerias. There's the Lekki Ikoyi VI axis of Nigeria, right? There's the rest of Lagos, Nigeria. Then there's Nigeria. Okay? Okay, and Maitama. So, ladies and gentlemen, I really want to say thank you very much to my amiable, distinguished panelists. They've been super. All right? Thanks to you all. Thanks to you all for also engaging and throwing them those questions. And I think on that note, I'll say thanks to me too. For breaking every rule. And I don't think they'll invite me back again, but
no, we like you.
Don't worry. I'll beg. All right, so thank you so much.